What's up, everyone? Welcome to another episode of Finance Simplified, the official podcast for Street Fins. We're here to break down the world of finance for you to understand from a relatable perspective with discussions with experts. My name is Alex, and this is episode 31. Unfortunately, Rohan wasn't able to join us for this episode, so filling in for him today is my good friend Ryan. How are you doing? Could you tell the listeners a little bit about yourself?
Hey, Alex. Thanks for having me here. I'm currently a freshman at the University of Washington studying finance and informatics. I joined Street Fins back in 2020 along with you, and I'm excited to be on for the podcast.
How is freshman year going so far?
It's going great. I met some really great people, and I'm loving my areas of study.
That's fantastic. So Ryan, the topic of today's episode is simplifying sovereign wealth funds. Why are we discussing them?
Sovereign wealth funds are important because they generate investment returns that ultimately allow countries to provide for their citizens. A country's wealth fund is arguably one of its most important institutions.
Yep, and Norway actually has the largest fund by AUM with over $1 trillion in assets. We're actually going to be talking to the Chief of Staff of Norway's fund today. We'll be making this topic into a two-part conversation. So this episode is part one, and we'll be releasing part two in 2 weeks from when this drops. Additionally, we just want to remind you that if you are learning from our episodes and want to keep supporting what we're doing, we'd be eternally grateful if you give us a 5-star rating and review on Apple Podcasts. Even if you're listening to this on another platform, as long as you have an Apple account or device, you can support us with the rating. Additionally, we'd love to know what feedback you have for us, so get in touch with us to send us any feedback to let us know how we're doing and what you'd like to see from us going forward. We'll be teasing the next guest at the end of part two. So, let's just get to simplifying.
Welcome to Finance Simplified, the official podcast for Street Fins created by students that simplifies the seemingly complex
and confusing
world of money. We're your hosts, Rohan
and Alex.
A sovereign wealth fund is a huge pool of a country's money that ultimately ends up being invested. As you can imagine, the way such a fund is managed can have profound impacts.
Sovereign Wealth Fund.
Sovereign Wealth Fund.
The largest sovereign wealth fund in the world.
Our guest today is Trond Grande. He's a well-known name in the sovereign wealth fund space, as he's the Deputy CEO and Chief of Staff at Norway's Sovereign Wealth Fund, which is the world's largest. His background and career are both so impressive that I think I'll just let him introduce himself.
Certainly. Thank you for having me. My name is Trond Grande. I am the Deputy CEO of Norges Bank Investment Management, and we are tasked with running the sovereign wealth fund of Norway called the Government Pension Fund Global. Brief background on me is that I studied at the Norwegian School of Economics, and I spent the first 10 years of my career at a Norwegian financial services company, mainly dealing with asset management / pension insurance business. And then I joined the fund in 2007 as their chief risk officer, and I've been the deputy CEO for the last 10 years.
Oh, wow. So you joined in 2007. So that was right before the 2008 crash. Could you walk us through how that timeline unfolded?
Yeah, it's quite a story. As I said, I joined in November of 2007 as the chief risk officer. And even though most people think of the global financial crisis as a 2008 event, you had actually seen some small things happening in the money markets already in August of 2007. So we were heading into what later was to become, of course, the Great Crisis. Little did we know, and little did I know, that it would be such a severe incident at that point. But, coming into this fund as the chief risk officer, losing 25% of the assets in your first year, it gives you a thick skin and a lot of learning, actually. So knock on wood, I would argue with hindsight that it was kind of living through a live stress test, the worst case scenario. And we came through it. So by that, I think we actually learned a lot, and we're kind of stronger and better prepared now than we were going into the crisis, obviously.
Yeah, definitely. And it certainly probably prepared you for turmoil down the line. And I think definitely in the last year and a half, that as well. What sort of attracted you to the sovereign wealth fund space, and what's made you stay within the field for, I guess, the last more than a decade?
Yeah, well, I actually had some hesitation leaving the private sector and going to work for the fund, to be quite honest. And not that it wasn't a super exciting task and a very unique institution in Norway. And I don't regret for a minute that I did it. However, where I was very intrigued by the complexities of managing assets and liabilities and trying to, hedge it out and manage that. that risk. And I was kind of, my thinking at that point in time was, going to an asset manager only, even though, you could argue there are some implicit liabilities to what we do. Wouldn't be as complex and kind of interesting and rewarding, but little did I know that it's 10 times more rewarding. And that comes with, just the significance of the fund to Norway as a nation. I mean, the value of the fund is 3 times GDP. It's 6-7 times the fiscal budget of Norway. So it's just a remarkably important savings vehicle for Norway.
That's great. And, I think that with over like a decade of experience, as you said, working with the fund, that you have plenty of expertise in that area. So to kind of start off with the whole concept of breaking down sovereign wealth funds, could you walk us through exactly what a sovereign wealth fund does? Maybe what its purpose, what kind of things it invests in, and how you raise capital?
Yeah. So let me start out by saying that sovereign wealth funds is a term that contains a lot of different vehicles. The only common denominator really is that it's state-owned and that it normally comprises money that is generated by the government and normally then derived from some sort of country's surplus. Most often that is because the nation in some shape or form is rich in natural resources, oil and gas being the case for Norway, but you could have other types of natural resources that creates this excess and surplus that the government can't really, at least in Norway's case, couldn't spend. You would overheat the economy, you would lose everything in inflation, you would spoil the industrial sectors of Norway. So you have to save. Once you get that amount of money, 3 times GDP now, you have to put something aside. And then, there's different purposes for the different funds. Our fund is a pension fund in name, but it doesn't really have, as I said, any explicit liabilities. So our fund has 2 purposes, really. One is to shield the Norwegian economy, the fiscal budget, from a volatile cash flow from the oil activities in the North Sea. So it's a kind of a stabilization/buffer fund. The other part is that this is wealth derived from fossil fuels that have been discovered on the continental shelf underneath the sea. It's been there for millions of years. The last generation was the one who discovered it. This generation has developed it and developed technology to take it out and refine it. But these generations shouldn't be the only ones to benefit from that type of wealth. So it's certainly first and foremost a generational fund. It's savings for future generations, albeit we also spend up to 3% of the fund every year to run the welfare state of Norway. But funds are very different, the sovereign wealth funds, both in their origins, both in their purpose, and in their investment strategy, obviously, and how they're thought of as an integral part of a country's finances.
So, yeah, that's great, especially since Norway, like you were saying, how their oil and gas reserves, that would be detrimental to the economy if that was all spent at once. So when a government ends up going and deciding to create a wealth fund, what kind of is that decision-making process? Like, when do they view that it's necessary to create a wealth fund? And in your case, how do they choose perhaps an outside organization to manage it, such as Norges or NBIM?
Yeah. So let me try and answer that question by going through how it was done and how it evolved here in Norway. And then I can add some flavor to that on how other funds have been developed. So the discovery of oil in Norway really dates back to, the 50s and late 60s. And through the 70s, as oil was found and companies were brought in to help us exploit this resource, all the excess revenues and all the revenues were actually just spent. There was no idea of any sovereign wealth fund. And that's because the cash flow wasn't really that big at that point in time. And then through the 80s, a debate started happening in the Norwegian parliament about whether or not at some point in time, this could actually be such a massive cash flow that we need to have a mechanism for handling it. And that discussion happened in the late 80s. And then actually in 1990, a law was passed which said that, if there is an excess on the fiscal budget in Norway, that money will be put aside and saved for future generations. Those who, and I was not present there, but those who were in the Ministry of Finance at that point in time said that was just a pure paper exercise. Nobody really believed that there would ever be a significant surplus that would be necessary to put aside, to put it that way. And if you think about it, arguably in a democracy like the Norwegian one, it shouldn't be possible to have the state save money while its population is still paying taxes, and arguably quite high taxes in the case of Norway. Because in a normal functioning democracy, normally you would expect politicians to fall for the temptation to either reduce the taxes or increase government spending, or both of them. That's why I call it a paper exercise. Nobody believed that there would be a surplus. They believed that the politicians would actually then just spend it or lower taxes. But the story is, of course, very different. So when you came to May 1996, that's 6 years after the passing of the law, there was actually a surplus, and the government decided to put that aside. And the way that they thought about it at that point in time was that still there was this belief that, okay, yes, we have a surplus now, but who knows, and it's probably not going to be a big fund. So let's not create a separate institution to manage this. Let's turn around and see, can't we just use our bank? And the bank of the state is the central bank. We have our checkings account there. Why don't we just create a savings account? And that's really how simple it was. They didn't want to create a new institution, and they just used their normal bank, so to speak, to have a savings account. And then the first couple of years, still in the belief that this wouldn't be really a long-term big fund, the investments were just mirroring the normal currency reserves of a traditional central bank. So say you only invested in treasury, bonds, very low risk, kind of very liquid. And then another couple of years passed and the inflows had continued. And it was decided, again, through discussion in Parliament, that, no, this isn't really currency reserves. This is something different. We're accumulating a lot of assets here, and we can't have them sit earning just, meager returns. So we need to take some risk. We can take some risk on this. It's really long term. And then it was decided to introduce equities into the asset mix. So the first part was 40% equities, and we held that up until 2007, just before the financial crisis. It was decided to raise the equity share to 60%. And then 4 years ago now, in 2017, we came up to 70% equities, and that's where we are today. So in the growth of the fund and in changing the asset allocation, we have also built out the organization. So now, even though we're within the central bank, we're a very separate part of the central bank. And we're actually the largest part of the Central Bank of Norway. So we have like 540 people managing the fund, whilst the more traditional part of the central bank is roughly 360, 400 people. But that's the story of Norway. I think other nations have gone other routes. They've created separate institutions. If you go to Singapore, you have GIC and Temasek. If you go to China, they split out CIC from the central bank. And if you go to Canada, you have a couple of large pension funds, the CPPIB, and a couple of others. So there's different ways of going about it. But the story of Norway is that, because nobody believed that there would be a surplus, we just used the bank, and then the story goes from there.
Awesome. That's great. And from what you've said, it seems that there has been a large political and legislative component to both the creation and the sort of management of the fund throughout its history. And then with what you mentioned about how Norges is a part of the central bank, which in itself is traditionally separate from the federal government, or in this case, the parliament for Norway. So what kind of level of autonomy do you have from the government? How much do the politicians and the legislator influence your actions and your things like asset allocation, for example?
Yeah, so that's a really good question. And I should add that the question about autonomy, or at least arm's length to the government from the actual investments, was also part of why it ended up in the central bank, just because, as you pointed out, traditionally and in most countries, central banks have a special place. I mean, they are mostly autonomous in deciding the interest rate and dealing with the central banking issues. And that has washed over to how the fund is managed. So the way it's set up is that big decisions around asset allocation is anchored in Parliament, but it's kind of owned by the Ministry of Finance. So it's not up to us as the operational manager here in the central bank to to deviate to a large degree from the overall risk limits that are put down. And as always, at least very often get kind of questions from sister funds that visit us. And when I talk about this fact that we anchor, the main decisions in Parliament, they kind of scratch their heads and ask if we have finance professionals in Parliament. And of course, some of them are, but most of them are just our elected representatives. So the point about anchoring these big decisions in Parliament is to make sure that you have the broadest possible political consensus. Because, in Norway, you have an election every 4 years, and then you could have a change of government every 4 years. And if the big decisions weren't anchored in the Storting and in the Parliament, then you would run the risk of having a change of investment strategy as you have a change of government. And then you wouldn't really be a truly long-term investor. So that's the important thing about kind of anchoring your, should we call it, risk appetite. Having 70% in equities is risky in the sense that you could have large short-term swings, but you're investing in this to harvest the long-term risk premium that equities provide. So the reason for anchoring there is really just to create stabilization around the asset allocation. And then, since we are investing it on the balance sheet of the central bank, we are responsible for every single investment that we choose to do within a mandate that is given to us from the Minister of Finance. So arguably, we have quite little autonomy, but we have full autonomy of the actual investment decision making. And we are the ones responsible, whether we buy this company or this bond or whatever. That's totally up to us. And hand on heart, the politicians have never come down and instructed us to do either this or that. Never. And this is kind of hard to believe sometimes, because it is the public's money. And there is, of course, a lot of debate. It should be a lot of debate on how we invest this fund. But it's also important to shield the sitting minister from any criticism that could come because we've done a bad investment or should have done other investments.
Yeah, that's a really fantastic point. And I think to sort of jump off of that, you mentioned that you're investing the public's money, you're investing Norway's money. And so I think that there's probably got to be a lot of pressure on NBIM and yourself to perform well. How do you sort of compartmentalize it and deal with understanding the fact that you do have a really important role within Norway's fiscal success for really every citizen?
Yeah, I think that is something that is very much front and center for all our employees, is this feeling of responsibility for something bigger than themselves, so to speak. However, I think it's really important for us in the top management to try and shield the organization from that pressure. And the pressure comes mostly through, I would argue, media and maybe some NGOs or other interest groups that, have opinions and share their opinions. What we try to do is to counter that is to be very transparent. So that is a very prominent feature of our fund. I would argue not all sovereign wealth funds are equally transparent, but for us, again, reflecting the Norwegian society, which is a very open democratic society, we need to be open to earn the trust of the citizens that this is managed properly in a good way. So transparency and communication is the main tools for explaining who are accountable for what parts of the results and why we invest the way we do, why we think it's proper to, take the risks that we do, because ultimately we're here to earn money for the Norwegian people. And so far that's worked pretty well. There's healthy debate from time to time on different aspects of what we do. The last thing that was heavily debated was, should we or should we not be investing in infrastructure assets? And we've started doing that. Infrastructure assets for renewable energy is now a part of our investment mandates. Another big debate is, to what extent should this fund align itself with climate targets? What does climate risk mean for how we manage this fund? So a lot of the big discussions happening, quite a lot of pressure, but again, we just try to communicate our role, what we do, and it's very transparent, our results. So far, that's been the main way of, it's not holding the pressure off, but it's dealing with the pressure.
Yeah, definitely. And you mentioned sort of having this long-term view. I think that's even a little bit different than an investing view, because you are at the forefront of other issues such as climate change or ESG-driven issues, and we'll definitely get to those later. But, what are some of the other challenges that you face when running a sovereign wealth fund? You can speak with specificity to Norway's fund, that maybe are separate than just investing decisions.
Yeah, no, absolutely. So I think what's been always important for us is and this is arguably equally important for all, especially sovereign wealth funds, that it's very clear what our objective is. And we're repeating that as often as we can. We are a purely financial investor. And by that, and by iterating that, I mean, we're not a foreign policy tool or an industrial policy tool or a climate policy tool or anything for the Norwegian government. And the important thing about that is that I think then you at least reduce the risk of other countries being protective once you're invested in their countries, right? Because that's what we are. We're guests in others' homes, and we just need to be very clear what type of guest we are. Because what you're seeing now is, with the somewhat raising geopolitical tensions, is that more and more countries, not too many yet, but still more and more countries start to become a little bit more protective of some of their more, should we say, critical sectors, i.e. infrastructure could be one, defense another one, technology a third one. And you see them putting in place regulation and restrictions on foreign investment, and in particular foreign government investment, right? And so that's the big issue, I say, right now, especially when you have a large fund like we have, when you become a significant owner in many companies, big companies, critical companies in other countries. You just need to be very clear that you are on the side of the company. You're not there to harm them or take over or do anything that is not in their interests. We're alignment of interest in the sense that we're a financial investor. So if the company does well financially, it will be a good investment for us as well. That's really, really important.
Hey everyone, that was then the part one of our two-part interview with Trond Grande on simplifying sovereign wealth funds. We'll be releasing part two of our interview in about 2 weeks from when this releases. But the first half of the conversation was absolutely incredible. What were some of the key takeaways?
It was really interesting to hear about the structure of Trond's philosophy on the merits of the Norwegian Wealth Fund. He describes it as both a necessary use of surplus as well as a future wealth builder.
Yep. Grande also mentioned that the sovereign wealth fund, due to its size and breadth, may run into challenges of regulation. There are clearly a lot of challenges to navigate in the space.
It was also interesting to hear about their approach to risk and that they take a purely long-term approach to evaluating returns. In today's day and age of quick money, it's a breath of fresh air to hear about different investing strategies.
Part 2 will be dropping very soon. We'll talk to you all in a bit.
Hey guys, I want to thank you so much for listening to this episode of the podcast. It truly means the world to us. If you like this episode and others, let us know by subscribing and giving us 5 stars on Apple Podcasts and following us on Spotify. Share us with your friends and check us out on Instagram and Twitter, both at StreetFins. You can also follow me on Twitter at RohanInvest. If you'd like to get in touch with us, please email fspodcast@streetfins.com. Thanks once again to Trond Grande for his insights today. I hope you understand the topic of sovereign wealth funds in a more simplified way. This episode was produced by the incredible Jeffrey Lee. I also want to thank Ryan Su and Alex Patel for doing such an incredible job while I was out. Once again, we're really happy that you're taking the initiative to learn finance and to better your future. If you haven't already, we highly encourage you to check out streetfins.com for articles, videos, and other content. Join the StreetFins community and tell your friends about us so that they can learn about finance too. We'll talk to you next time on Finance Simplified.